Elon Musk has been single-handedly pumping and dumping cryptocurrencies. And that says a lot about how the entire $2 trillion cryptocurrency market works. And therein lies a huge problem. At this point, nobody can deny the fact that Elon Musk is one of the world's most influential entrepreneurs out there, because he is heading some of the world's most influential companies, like Tesla and SpaceX. Elon Musk is also an investor, and there is one big lesson that you can learn from Musk that will make you a better investor. If that caught your attention, we think you need to stick around to know more about Musk's investment strategies with cryptocurrencies. Musk has always been a fan of cryptocurrencies, and it's a fact that he just cannot stop tweeting about them, which resulted in a massive pump and dump in prices of cryptocurrencies, especially Dogecoin, Bitcoin, and Shiba Inu. Cryptocurrencies are the type of digital currencies that are supported by the blockchain technology, in case you didn't know already. And decentralization is the reason why cryptocurrencies are being talked about a lot, because we never had a decentralized currency before Bitcoin. This means that Bitcoin is not issued by a central authority, as the entire network is run by miners that solve complex mathematical puzzles to validate the transaction. The current trend in financial decentralization and digital currencies will drive the growth for cryptocurrencies, and we witnessed this during the COVID pandemic. This was also the time when investors held on to cryptocurrencies for value reserve. Right now, because of the Russia-Ukraine conflict, inflation rates are skyrocketing to new record highs. Everything is getting expensive, and the purchasing power of money is just not the same anymore. Inflation rate is something that demonstrates the health of a country's economy. This is also the measurement tool that is used by central bank, government officials, and economists to understand whether action is needed to keep the economy healthy. This is also a period when businesses are producing, consumers are spending, and supply and demand are as close to equilibrium as possible. Increase in the rate of inflation is always good for both consumers and businesses. Let's say that during deflation, consumers tend to hold on to their cash because goods are more affordable, but businesses tend to lose money, so they end up cutting costs by reducing pay or laying off people. But on the other hand, when the inflation rate goes out of control, businesses will raise their prices, and people are forced to spend more money on essential items. The world's richest person and Tesla SpaceX Chief Executive Officer Elon Musk tweeted, "As a general principle, for those looking for advice from this thread, it is generally better to own physical things like a home or stock in companies you think make good products than dollars when inflation is high. I still own and won't sell my Bitcoin, Ethereum, or Doge for what it's worth." This tweet was a response to Michael Saylor, who is the Chief Executive Officer of MicroStrategy and a prominent Bitcoin bull. Musk also clearly knows that the entire situation with cryptocurrencies is unpredictable, which is why he thinks Michael is wrong about the entire thing. Just before Elon Musk's tweet, Bitcoin had fallen about 3%, once again showing the influence of the Doge father on crypto market sentiments. So it's safe to say that Elon Musk clearly understands cryptocurrency investments, which is why we think he is holding on to his investment now. For those of you who don't know, hodling, or holding, is a strategy that helps investors avoid real loss from the short-term volatility of cryptocurrencies and gain returns from the long-term value appreciation. In theory, holding is a less risky option than trading, but investors still need to be updated about changes in regulation, because cryptocurrencies are still the black sheep in the eyes of governments and centralized banks. You should be now knowing that cryptocurrencies are extremely volatile in nature, unlike the traditional stock market that we are all entirely aware of. Cryptocurrencies provide great opportunities for traders to build long and short positions. But if you want to play it safe with crypto, holding onto your assets for the long term would be the best thing to do. This way you, as an investor, won't be exposed to short-term volatility, and you could avoid the risk of buying high and selling low. But again, this will only work for the established cryptocurrencies in the market because the newer ones are extremely risky, and that is where your research will help you out. That brings us to the risks involved when it comes to holding on to cryptocurrencies. Well, the reason why so many people are interested in cryptocurrencies in the first place is due to the high return nature of cryptocurrencies, because the financial world has never witnessed anything close to what Bitcoin was able to offer in terms of returns, which makes Bitcoin the most valuable asset class of the last decade, and it was never Apple or Google stocks. Like we mentioned earlier, cryptocurrencies are extremely volatile, so if there are chances of Bitcoin prices reaching record highs, the chances of that going down is equally high, and sometimes even more, which means that if you are an investor who wants to deal with cryptocurrency, or if you're already an investor in cryptocurrency, you need to have a larger risk appetite when dealing with cryptocurrency, because you're taking a higher risk compared to conventional investment instruments. You should also have enough capital to deal with market volatility and also to meet unexpected liquidity needs. So many things like cryptocurrencies are still unknown because the market is still in its infancy. If something like Elon Musk's tweets are able to change the prices of cryptocurrencies, then it clearly indicates an underlying problem with cryptocurrencies. And that is the fact that the price of these assets depends on what people are willing to pay for them. So if these assets are hyped up, that's when the prices go high. And when that hype fades away, the market witnesses bearish sentiments. And that's when you lose a lot of money. But hey, if you're not selling your crypto assets, you're actually not losing anything because you still own what you bought, and that exactly is the point of holding on to cryptocurrencies. And Elon Musk clearly understands this. That should be obvious because he is somebody who is trying to colonize the Red Planet with his company SpaceX, and he's getting ready to put humans on the moon once again with NASA's Artemis project. He's already the richest person on the planet, so he might know something about finances and investments. And this is the person who clearly understands cryptocurrencies better than anybody else. The other issue would be Tesla suspending Bitcoin payments because of a major underlying issue with Bitcoin mining, which is the use of huge amounts of energy to mine Bitcoin. And most of this energy comes from non-renewable sources of energy. So if the world's largest cryptocurrency becomes mainstream, it is going to undo everything that we did toward making the future sustainable by switching to renewable sources of energy. But the renewable source of energy that we have today might not be able to deal with the huge demand for Bitcoin mining. And finally, different countries have different rules when it comes to cryptocurrencies. And not every country is going to encourage cryptocurrency, which is affecting the value of cryptocurrencies like Bitcoin, because the unfavorable policymaking and public's perspective on cryptocurrencies is still a major hurdle for cryptocurrencies to become mainstream. As an investor, you need to hedge against inflation by having a diversified investment portfolio, which means you won't be putting all your eggs into one basket. And that's exactly what Elon Musk is doing. He's invested in cryptocurrencies, but he's not willing to sell them yet, even if the prices are slightly higher than what he initially paid for. He is all about investing in crypto for the long term, because he clearly knows that if he sells his crypto holdings, the market would crash once again due to panic selling, considering how influential Elon Musk has been throughout the ups and downs of cryptocurrency. Keep in mind that this video is not a financial advice video. This video is of pure infotainment value, and you should view this as such. Cryptocurrencies are extremely volatile, which means you need to invest in assets that you clearly understand. Otherwise, be prepared to lose a lot of money. But if you play your cards right, just like Elon Musk, you will be able to make a lot of money with cryptocurrencies. And that's exactly why people are investing in Bitcoin and other cryptocurrencies. Newer cryptocurrencies that promise to help you get the moon are riskier than the well-established ones. So play your game with due diligence.